Afternoon, everyone. This is Campbell McCrary from Amvest Capital live in New York City. Today is Monday, February 27th. Welcome to the Tectonic Metals Inc. live webinar. Tectonic trades as TECT on the Venture and TETOF on the OTCQB and on the Frankfurt as T15B. Hope you'll enjoy today's program. It'll be available in on-demand replay about 2 hours from now. Amvest is a New York-based specialist in investment management and corporate finance firm focused solely on the natural resource sector. Please note this webinar, this event is most definitely for informational purposes only. Please read this disclaimer quite carefully. And it's also on your screen for the duration of this event underneath the video box. We're very pleased to have us today back Tony Reda, the president, CEO, and a director of Tectonic Metals Inc. Welcome back, Tony. It's been a while, and really excited to kind of see where the chips have landed with the focus and all that, and I'll kind of take it from there. And please, everyone, send in your questions. You can do that by asking a question of management. Just highlighted that. If you like what you see here, you can share it in an email. It'll prepare one, and the usual social media things. And note the link that you used here in a few hours will work for the replay on demand and all that, which you'll get emailed anyway. But you can also find it at amvestcapital.com/webinars. Just Google that. And then we love your feedback, so you'll be queued here and there for feedback, and it goes to Tony, so don't hold back. All right, thank you.
Thank you, Amvest, and thank you, everyone, for taking time out of your day to learn a bit more about Tectonic and allow me the opportunity to speak to you about our exciting flat gold project, a little bit about our team, our business model, and our approach to exploration. As the title suggests, I'm going to be hitting on 2 points here. Big deposits leave big footprints, and this is in context to our flat gold project. In my 20-year career, I haven't seen a project this early on that demonstrates this much scale. So stay tuned for more information as to why I'm excited and why I think this project represents a tier 1 deposit opportunity. And the shift in the game is when we formed this company back after Campbell was acquired in 2016 for $520 million. I was a vice president of that company. And I'll talk about the other executives of Campbell that now are part of Tectonic. But that premise, the shift in the game, came out of a conversation I had more specifically with Ira Thomas, one of our founders, in regards to what can we do differently. And whether it's in your personal life or professional life, it starts by asking the question. And that was the question we asked. Is there a better way to explore? Is there a better way to conduct ourselves? And we don't have all the answers. We're still figuring it out as we go. But the shift in the game is about asking those types of questions on all elements of the business. So stay tuned for more on that as well as I move through these slides. I will keep it to roughly 15, 20 minutes, and then there'll be a Q&A as well. I draw your attention to our forward-looking NI 43-101 compliance slide. This is on our website. It is there for a reason, so please take the time to read it at your leisure before making any sort of investment decision in our company. So why am I here today? Why am I excited? Well, first off, I'll start from the bottom up here. We're on the cusp of heading into an exciting field season. This planned flat gold project drill program, which is kicking off early summer here. This is our inaugural drill program. As I mentioned earlier, it is one of the most exciting projects I've come across in my 20-year career that really is boasting right from the get-go a tremendous amount of scale. Scale is not the only part of the equation that makes an economic mine. There is other elements such as grade, jurisdiction, metallurgy, what type of margin, all-in sustaining costs, all these things kind of fold into that equation of what makes something economic. And again, I'll try to hit on those important pieces. But another element, to the flat project is that we do view it as an open pit heap leach opportunity. open pit projects. We offer, lower scale heap leach. You can, sorry, not lower scale, lower grade opportunities. Same with heap leach opportunities as well. Lower capex, lower opex, and sometimes larger margins than other traditional types of metallurgical processing. The team at Tectonic, some of it's predicated on the former Campbell executives that have now reunited and kicked off Tectonic. But what I will say about our team is that they are individually handpicked, looking at all elements of mineral exploration, but more so the business side of it. This is not just 5 geologists that got together. We're looking at the capital markets, ESG, legal, finance, mining, geology, all those elements, and our team is fully vested. Myself, I'm 100% Tectonic. I don't work for any other company. All of my ideas, time, and energy go into our company. The other thing that makes us unique and possibly a bit different from other explorers is that we're actually endorsed by sophisticated resource funds. So they've done their due diligence on our company. They typically don't make an investment decision until they get into the nitty-gritty of projects. But we also have another unique shareholder, and that's our native corporation that we've partnered up with. They are called Doyon Limited. They're the largest private landholder in the state of Alaska. They're a for-profit economic entity that not only owns the lands, but supports mineral resource development. And our initial relationship started with them in 2018, where we formed our first mineral lease agreement. That's transitioned to 5 mineral lease agreements and them making an investment into our company. So we actually have native capital behind us, and that is huge and speaks to hopefully the merit of our team, the way we explore and conduct ourselves, and also to the ESG side of things. Not only do they entrust us to work on their land, but they also entrust us with their capital. This is the entity here, and again, you can Google them, take your time to research them. But we're very proud and honored to have them as a shareholder. So speaking to our business model, I think it's important to realize, and I don't think it takes too much imagination to figure this one out, but most projects don't become mines. And with that being said, the failure rate is high. And so I think it behooves us to not only focus on the upside, but also focus on risk management. So this is a very critical component of our company and how we operate. We do work directly on native-owned land. We get alignment, or try to get alignment, on day one. And we've also formed production agreements. So these aren't just the production agreements. They're akin to, say, an impact benefits agreement, which you might have in Canada, which traditionally is negotiated at the feasibility stage. Well, we've taken that agreement and tried to plant it on day one. So yes, we get alignment by working on the land. Yes, we have them as the shareholders, but B, we have agreement that we can run with into production. And this took a fair bit of time to orchestrate, but again, very proud of this agreement. We now have a template that we utilize going forward. So all of our projects embody that production agreement. We also focus, okay, what are some of the risk items? Well, jurisdiction's one of them. Metallurgy. Can we do metallurgy as quickly as possible? I'm still shocked and amazed by how many companies put out inferred resource estimates, or resource estimates in general, without any metallurgy to support it. This is a make or break for many projects. If you're looking for production or cash flow, we're not your company. We focus on the discovery stage, as highlighted here by this curve that was developed by mining icon Pierre Lassonde. This is the sweet spot of our team. Yes, we've done some production, we've done feasibility, but discovery is where the sweet spot of the team is. And again, going from moose pasture to something economic, that's where shareholders can benefit a tremendous amount of value in the shortest amount of time. So that's where our projects are positioned at. And the flat project that we are going to be drilling this year is positioned at that stage. So who's going to make this all happen? I mentioned some of the executives from Campbell. Ira was the CEO, myself VP Corporate, Allison VP Sustainability. We banded together and said, okay, let's start the next generation of this. And we brought on very high profile, very well experienced and seasoned professionals in various skill sets. Kurt, which is noted here, one of the founders of Tectonic, and resides in Alaska, and also has 40 years of experience, been involved with numerous discoveries. We have Joe Perkins, probably the most well-respected, well-known resource lawyer in all of Alaska. He announced his retirement last year, and I quickly approached him and said, hey, would you like to be a director of Tectonic? Took perhaps a bit of arm twisting, but he said yes. We have Mick Roper in his first public directorship. He was formerly with Agnico Eagle Mining. Our mine finder, Pete Cleespies. Most notable discovery there is the 8.5 million ounce Hope Bay deposit, which was sold to Newmont for 1.5 billion. And we have Bill Storm on the IR front, former equity analyst, sales trading, and a director of the British Columbia First Nation. I will draw your attention to our chair. And so this was the former VP of Sustainability for Kaminak. But prior to Kaminak, Allison actually by trade is an environmental biologist. She's also been involved in some way, shape, or form in the permitting of 9 mines in Northern Canada. She started out representing First Nation groups in Canada, and then she worked for the federal government, then for major mining companies, and then for junior mining companies such as Kaminak. So now she's our chair, leading the charge on the board side of things. Our team collectively owns approximately 11% of the stock. And if you work for Tectonic on the management side, that's 100% of your time, your energy, all my capital ideas go into making this company a success. Now, going back to the big deposits leave big footprints. Okay, Tony, tell me where are you seeing this big footprint? Okay, so this blue box here, which wasn't a perfect blue box back in the day, our native partner consolidated the land position. This is a 40 kilometer by roughly 40 kilometer or 92,000 acre land position, predominantly on native owned land. What you have here is the 4th richest placer mining jurisdiction in all of Alaska. That dredge that you see there, that was from the Guggenheim family, rushing into the Klondike in search of gold like many others. And so all the placer endowment here, you can see Flat Creek, which our project is named after, 650,000 ounces of recorded placer production. You have Chicken Mountain, which is the main target. That sits at that is the sort of hilltop. But every stream, creek, or drainage coming out of this hilltop or this intrusion is carrying gold. You can look up at the hill. In this case, this is one of the best examples in academia in the world of the most direct bedrock to placer gold relationships out there. It's been studied at length. And so that begs the question, how big is the source? This gold that's found in the streams of creeks, it came from somewhere. It didn't fall out of the sky. There's the hill, there's Chicken Mountain that supports that it's the source. So let's go figure out how the source is. And that's one of our objectives this year, is to really hammer home the scale of this system. Another thing that supports scale is the mineral belt that we're situated in. So this is called the Kuskokwim Mineral Belt. It's host to one of the largest, if not the largest, undeveloped open pit gold deposit in the world, and that's Donlin. It's co-owned by Barrick and Nova Gold. It currently sits north of 40 million ounces. It is a refractory deposit, so that has different metallurgical processing needs than Flat. Flat is completely different, but it is situated in the same mineral belt. And a lot of people ask me, how did you acquire this project? Well, it started out by asking the simple question, can the Kuskokwim produce another 45 million ounce gold deposit? If there's one, there's a good chance there's another one, because it has the ability to do that. And I do view this belt as a very immature, but potentially very prolific belt, perhaps where Red Lake and Kirkland were at like 50, 60 years ago. Donlin, the budgets there are 94 million from last year, and the budget put forward this year. They do have a permitted gas pipeline going into, natural gas pipeline going into the project. Again, we view Flat as a standalone. If Donlin moves forward, we will hopefully benefit from that infrastructure improvement, the pipeline. But if it doesn't, we're okay. On site, we have some infrastructure of our own that we benefit from. A 4,100 foot airstrip, which can accommodate a Herc. That's a 45,000 pound payload plane. You can drive your Ford F-150 in the back of that. It is massive and extremely beneficial to have that on site. The placer miners from back in the day built roads or dirt roads from the airstrip to the zones, and there is commercial barging available nearby. The topography is very manageable. This is rolling hills or a plateau. It's not mountainous by any stretch. Again, speaking to scale, it's always beneficial to know what sort of deposit model you're chasing. This one here, our flat project, it's a bulk tonnage intrusion-related gold system. Okay, Tony, what does that mean? Well, bulk tonnage means large scale, but the granddaddy or the godfather of this model, as far as I see it, is the Fort Knox mine. That's owned and operated by Kinross. It's one of the most successful mining operations. It started out as a higher grade mill operation, and now it's transitioned into an open pit heap leach mine. You can see here, they're processing 0.3 grams per ton on a heap leach pad. The reason why they can do that, well, essentially it's run of mine or being placed on a pad. They're also near a highway. That is extremely beneficial, and definitely a large in size. And based on tonnage, I believe it to be the 7th largest producing gold mine based on tonnage in the world right now. Other examples, Eagle, which is owned by Victoria. Again, open pit heap leach. Donlin, large in size, refractory nature. And the most recent discovery of this type of gold deposit or gold system is the Snowline Rogue project. That project, and kudos to the team, they drilled it for the first time last year, had a significant amount of success with the drill bit, catapulted their stock to a $400 million market cap. So this tells us that the market does pay attention to discoveries, but also to this deposit style. It's in the Tectonic Gold Belt, which is where all these projects and flat is situated on. We're on the far side of it, on the Alaska side, but nonetheless part of the Tectonic Gold Province. And our objective at flat is, yes, it's big, but let's try to assess metallurgy and economics as quickly as possible. And the metallurgical results, which I'll speak to in a moment here, came back extremely favorable to support something that is free milling. Continuing with the theme of big deposits leave big footprints, we've now zoomed into Chicken Mountain. And what you see here, those magenta or purple dots, are all gold and soil samples, or soil samples that came back with anomalous gold. Magenta is greater than 200 parts per billion. That's 0.2 grams per ton. Remember, Fort Knox is 0.3, the current reserves there. This soil anomaly is open in every which direction. It's an unglaciated terrain, and the fact that we have 55 drill holes in these sort of two circled areas, or just right here in the heart of Chicken Mountain, if you can see where I'm pointing at. Actually, I'll just do this so you can see right in here. 55 drill holes. Every hole has hit gold mineralization, not one duster. So that tells us that we can rely on the soils to deliver bedrock mineralization. And that should give confidence that the other soils can be extremely indicative of more bedrock mineralization. I will also draw your attention to this target called the Golden Apex. It is a Chicken Mountain equivalent, and there's another slide that speaks to it a bit more, but essentially untested volcanic cap rock, and a completely intact system, which we're extremely excited to go drill test this year. You'll also note at Flat Creek, the most prolific placer producing creek, no drilling up in here. That's another opportunity. Looking at some of the drill results that were obtained historically, we've now taken those soil dots and we've contoured it. That's what this kind of purple magenta blob is. You can see here some of the grades, 27 grams over 1.5 meters. Okay, that's good. 12.5 grams over 24 with 211 grams within that interval. We have 1.28 over 31, 0.98 over 76, 5.6 over 7.6. So a blend of higher and lower grade. You can see also note the drilling pattern. The drilling that took place here was in the mid 80s by guess who? The same company that discovered Advance, the Fort Knox mine, That was near a highway. They made the discovery there. They also had flat. More complicated land position, considered very remote back in the mid 80s. Gold price anywhere from $200 to $400, depending on what period you're picking. So didn't quite cut the mustard for them back in the mid 80s. Fast forward to the mid 90s, in 1997, a junior mining company acquired this property. They weren't public. Bre-X happened, the Vancouver Stock Exchange collapsed, and this project got put on a shelf. But you can see the drilling wasn't very much systematic. They were drilling underneath the placer workings and finding gold. So an opportunity for us is to establish or find out or determine what's controlling the high-grade mineralization. How do we get more 211 grams per ton? And as an explorationist, the fact that there is 200 grams per ton in the system, or 12 grams, these aren't one-offs, 27 grams, is a good sign that there could be more of it. It just needs to be drilled out systematically and figure out what's controlling it. Now, we're going to dive underground from point A to A prime to give you a sense of what this looks like below surface. Now we're dealing with a kilometer strike. Still, if you were to, kilometer strike for a gold system, that can qualify very easily as a significant deposit. What you'll see here in the middle, there's a gap. This hole is completely mineralized. This hole is completely mineralized. And in the middle, we have two trenches that are about 200 meters in length, but within that, 6.62 grams over 27 meters. Again, evidence that there's higher grade. Up in here is the 12.5 grams per ton over 24. And here we have, again, a 200 meter long trench that's mineralized. Within that, 1.17 grams over 64. You'll also note little to no overburden. Mineralization starts right at surface. And if we were to go down the path of building out a compliant resource, well, I would do that right here. But that's not the objective this year. We want to first figure out how big the system is. 1 million or 2 million ounces in my world doesn't necessarily cut it. We want to go after 5 million plus. So where are you going to find that? Well, this is a starting point. And what you'll also note with these yellow stars is that thankfully our native partner stored the historical drill core in a warehouse. And part of our acquisition when we were looking at this project was to develop a 3-year plan. And in year 1, we were like, we're going for the jugular. We're going to do metallurgy right off the hop. Most companies don't do metallurgy in the first year, let alone in a year before they go drill. And we got those results back. They were very favorable. There's some slides that speak to that. But I wanted to emphasize our approach is not here to flip stock or flip projects. We're looking at this project from, is this going to become a mine? And if it is, let's reverse engineer that and bring confidence on day 1, on day 2, on year 2, on year 3, on year 4, and tackle those big risk items. We're not going to play shy here. Now, if we step back, zooming out again, we're looking at Chicken Mountain. From one drill hole to the next, we have 2.6 kilometers now of strike. And what this slide shows you is all of the drilling. And what you'll see here is that the average drill depth was only 96 meters. So they didn't drill this extremely deep. There was some drill holes, one in particular one close to 200 meters, but the average was 96 meters. The other thing you'll note is that the drilling, again, the mineralization, look at these holes right here. These all start right in mineralization. We also have 25 out of the 55 holes ending in mineralization. That's a very good sign for depth extent, gives us the confidence to go deep. If I were to challenge any explorationist, go drill me 55 holes and make sure you don't miss on one. That's nearly impossible. So this is showing signs of a very robust system here. And to give you more context on sort of the tonnage or scale opportunity here, what you're looking at in this slide here is, again, the golden soil, the 4 kilometers of it. And you can see the drilling only tested approximately 30% of the soils, maybe 40, if that. And if you look at, okay, what is a Fort Knox mine, 7.5, almost 8 million ounces of past production, what does that look like geometrically? And so you get about 2 kilometers of strike, 0.5 kilometers depth, 0.8 kilometers of width. Well, there you got the Eagle mine. And well, if you look at our Chicken Mountain target on the longitudinal here, you can see there's a lot of white space to build tonnage. This is, you could fit 2 of these Fort Knoxes in here. Again, I'm not saying that we have Fort Knox, but just saying there is the visibility on places to build ounces. And I might add actually quite quickly. Now, moving forward, but back to the original comment about the golden apex. So this is an intrusion, bulk tonnage intrusion related gold system. You can see here in the topography, the vegetation that's kind of eroded away. That's the Chicken Mountain complex, if you will. And what you also see here on our geology map is the orange is the host rock, and it sits on both sides here. Now, when you look at the geophysics, it's clear as day. And you can also see another one lingering here at Golden Apex. We have soils to support. There could be something significant there. We have the geophysics, the geochemistry in the gold is indicative of a Fort Knox type of system. Again, because of that volcanic cap rock, the soils are somewhat more discrete and again, untested. And what's interesting also is these pink here, these pink squiggly lines, those are the historical placer producing creeks. And again, remember I said Chicken Mountain, all the streams and creeks draining out of it are carrying gold. Well, if you'll see on this side, you have 2 streams and creeks, and this one here, and this one here, carrying gold on the backside of Chicken Mountain. But there's no golden soil here. So there's actually a structure that we believe that's sort of faulted off some of the mineralization here. And we have the exact same host rocks that's hosting gold on the left-hand side as on this side. And I'm actually going to draw that here for you. So if I can do this, so there's your structure. So on this side here, all the soils, 4-kilometer golden soil anomaly. Well, what happened on this side? You got the same host rocks, and guess what? You got placer production coming out the backside. Didn't come from the sky. It came from Chicken Mountain. This is your entire intrusion here. This is going to be a huge target for us here. And again, here at, that's my question mark, by the way, at Golden Apex. And there's other targets on the property. But right in here, we're viewing our 5 million ounce potential. That's a lofty number. And there is evidence, whether it's the soils, the placer production, the drilled strike, 55 holes, all hidden mineralization, only down to 100 meters, and the deposit model and the mineral belt, all supporting something significant here. Okay, metallurgy. Now, we collected that historical drill core, we built out composites, blends, and we subject the core or the met samples to various types of testing. The more testing you do and the different types of testing, you get a good understanding on the mineralogy, on the recoverability. So this is why we did all these tests. Now, the first test, your conventional bottle roll. And what we see here is an average gold recovery of 95%. Huge tick. Second thing, very fast uptick, recovering quickly. Third, very low cyanide consumption. That is huge. And then low sulfur content. In the entire system, we have anywhere from 0.01 to 0.02% sulfur. No preg robbing identified. Those results were so fantastic that we said, okay, let's do a coarser crush. Now, the next testing or metallurgical testing we did was this coarser crush that can be used as a proxy for assessing the amenability of the mineralization to heap leaching. Remember I said Fort Knox processing 0.3 grams per ton, heap leach. Well, this is not a column test. A column test is your number one sort of definitive test. You have to do a series of them, mind you, to assess whether or not it's heap leachable. But this can be used as a proxy. And so the next step is to collect material for the columns. But what we have here is an average recovery rate of 88.5, and 4 of the 5 showing 94% gold recovery. Now, your average open pit gold mine right now, the average grade, I should say, is 1.1 grams per ton roughly. Your average heap leach open pit mine, 0.65. Average recovery rates around 0.65 0.7 depending. This gives us the ability to process lower grade material. Now, yes, I believe there's higher grade material, but trying to figure out how to make 10 grams per ton You don't need to be a metallurgical engineer to figure out how that one can work. How do you make 0.7, 0.8, 0.9, 0.5 grams per ton work? We know with these intrusion-related gold systems, or any gold, there is always lower grade material. So that's important. Heap leaching offers lower capex to build the pad, traditionally speaking, lower OPEX, lower all-in sustaining costs, which in turn generates more margin when you produce an ounce of gold. Us junior mining companies, a lot of us, are focused on finding gold. That's important. But the other element of the balance sheet is what does it cost to produce an ounce of gold? And what are you selling it for? So what's the economics? And that's what we're trying to establish right from the get-go. And, you know, like I said earlier, we don't have all the answers, but I think we're taking the necessary steps to figure it out. The other thing to note is that the lower or the fresh sulfide sample. So now we're looking at, again, this is a lot of gold mines process gold this way. We're looking at a gravity con with a tail bottle roll. And the average recovery rate was 97.2%. That sulfide ore, which here is less than 0.02%, 94% recovery. This is significant. And also, I would say about the other slide, if you notice the lower recovery one is that in a column, you may be able to get better recovery rates because a column testing sometimes, well, not sometimes, it can go for 60, 90, 120 days, sometimes even longer. So you have a longer leach cycle to get that gold to free up here. The share structure of the company, just under 3 million in the bank right now. 239 million shares outstanding. Yes, we're a junior mining company. Yes, we're doing exploration. Unfortunately, as we probably all know, this hasn't been the best of times over the last few years. So we're raising capital at lower prices. We've probably raised north of 20 million to date. So our team can raise capital. What I will say out of that, though, 60% of it is held in tight hands. So the public float is probably about 100 million-ish shares outstanding. And if you look at the Tectonic team, we own 11%. Doyon's our native partner, 12%. Just those two entities, we have about 23% of the stock locked up. And then Crescat, 19.5, was advised by Quinton Henning, very well-known and respected geologist. So those three entities, you're looking at, 43-ish%, if I'm doing my math quickly here. We all report if we sell our stock, not that we intend to, but hopefully that gives you comfort. You can see whether or not we're selling, but very tied up in strong hands. Again, resource funds that have done their due diligence prior to investing in our company. And my apologies if you hear a dog barking in the background. I will leave it at that for the moment and go to the next slide. I'm going to ask, well, what's your catalyst? What's going to create value? Well, quite simply, we are going to go, the intention at least is to go drill this year. We want to test the scale of the system, as I mentioned earlier. So wide-spaced, aggressive drilling. We have Chicken Mountain at depth, that 4-kilometer golden soil. And we also have the Golden Apex target and some other exploration targets. The Tectonic team does have other projects, but for today's presentation, I thought I'd keep it specifically focused on flat, which is where we're going to spend the bulk of our time, energy, and capital on. You're looking at our VPX and myself there. This is in October, mid-October. For those of you that are not familiar with Alaska, this is near the coastline. There's no snow on the ground. There's no mountains. There are mountains in Alaska, but not on our property. You can work all year round if you choose to do so. Right now, our season is anywhere from April to the end of October. We were in the field the end of October. Donlin, the nearby entity, again, they can work all year round, but I believe last year they went from February 1st to November 1st. So with that being said, I'll end it there, and over to you, Campbell.
Sure. Please send in your questions. Just type them in the obvious place, and it'll go to me. And just Tony and I see the question. Tony, I'll just sort of read them to you.
Yeah.
But kind of help me imagine what the Flat Gold project might look like. Multi-million ounce. And how much drilling will you do before we can kind of get an idea of delineation and what would be a reasonable picture and trajectory? Um, are we talking? You mentioned Donlin Creek. That's a monster, right? So that's headline, world-class news there. So are we talking that size? Can you give us some context? If you
Okay.
can, without
Yeah,
making, I guess, pull out your forward-looking statements.
yeah.
What are people
I'll,
saying? Yeah,
I'll take the forward-looking statement and paste it on my
yeah,
head here as I
yeah.
talk. Um,
Or what is it
you,
not? How about that?
no,
Yeah,
I'm being cheeky.
yeah,
So, like,
okay.
Mother Nature can hide 500,000 ounces. Trying to hide 40 million ounces is going to be a little bit difficult, right? There's going to be evidence to support something
Yeah,
significant. These are broad general statements. So it is all those things that I said earlier, like we're in the right mineral belt. The deposit style supports big. We have a 4 kilometer long golden soil anomaly. So, you know, 55 holes hit. I told my VPX it would really suck if we missed on the first hole. That would be, we would break the streak of 55 and 55, 455. So, but 55 holes. I think sometimes, even as an investor myself, we hear companies spew things, and like I'm like, how can I get that across? Like 55 holes and every hole hit gold mineralization. Not every hole is spectacular, but that's significant. So, there's for us, myself personally, I'm not doubting the scale potential. For me, it's going to come down to the economics, which is what it should always come down to, because 5 million ounces is only great if it's economic and can be mined. So I think you're asking about how big it is. Is it as big as Donlin? I don't know. I mean, I was going to point here that this is 2.6 Ks. You can see the drilling up here in the plan map. Now that's only one section of the property, and that's all in the valley here where the placer working. There's that pink, the placer workings of they neglected it all up in here. I'm not saying they didn't neglect it. They didn't get to it. So this thing is massive, and there's more evidence to support the soils are indicative of bedrock mineralization than there is evidence to support that it isn't. So what are we going to do this year? And it's challenging as a company with finite amount of capital to decide, okay, how do you show 5 million ounces, right? Well, you can't show it by drilling 25-meter spaced holes. You have to step out. And so that we're devising our sort of our drill collar locations right now. Golden Apex is going to get a few holes. Doing fences, because this mineralization can be homogeneous or in these types of systems. So doing wide spaced fences across the soil anomaly is important and necessary, because we don't know if this is the best part of the system. We know from the historical reports they were drilling there because placer was being found in the creeks. And once you have success with the drill bit, which they did, they stayed in that zone or in that pocket. So, you can, that's going to be important for us to do that. But at the same time, we want to show scale for our sake and for our shareholders. And that the benefit our shareholders will have is that hopefully they can sleep a bit better at night because they have metallurgy before we even drill. So when we announce a mineralized intercept, say 2 grams over 50, hypothetically speaking, you'll actually have metallurgy, not on that specific hole, but on the system that supports something that's free milling. And that will, to me, I think that's a huge value add. If you were a resource estimator, so when I acquired this project, I hired a resource estimator to do the due diligence, and I gave him this section right here. I said, assume this is infilled, take an average grade of these holes, drop it down to 200 meters, kilometer strike, open pit, what are we looking at? And I'm not going to say that number, but you can start to, get indications of that. I will say that when we presented this project to Crestcat, they were partially diluted. They were a 12% owner in our company, and they went to 24% partially diluted based on the merits of this project. And also keep in mind that Quinton and Crestcat, Kevin and Tavi there, they identified snowline early on before it was drilled. And that has been a huge win for them and the snowline shareholders. So they kind of know these systems, they know what to look for. And the fact that they doubled their ownership in our company predicated on this, again, should hopefully provide a bit of comfort.
And yeah, given your remoteness and you know, you're in it, and it
Yeah.
has to be high grade and world class to kind of be worth it. Is that a fair? That's the bet.
The bet is for me to make this work, you know, open pit heap leach. Major mining companies want homegrown resources. That's been highlighted by the war and things of that nature, that they want resources close to home in safe jurisdictions. Also, heap leaching offers a lot of cost advantages, lower environmental impact, let's say greater OPEX. And I know they want it because we sold one to Goldcorp for 520 million. So I've been trying to find the next sort of coffee or the next open pit heap leach opportunity. And, you know, these 45 million ounce gold systems aren't typically next to a highway. You have to go further afield. And, you know, we know that that's why economics is important to figure out how these things can work. And we're getting ahead of ourselves. We still haven't even drilled this thing. So that's why we're excited to go drill test something of this magnitude this year. And, you know, Mother Nature, one thing I know for certain is that she always humbles you. And there's going to be some twists and turns. It's never a straight line to the top. Maybe the grade is the issue. Maybe it's something else. I don't know. But there's going to be some swings and roundabouts. But as a whole, like, this project's being de-risked. It's on native land where the native landowner is our shareholder. Doesn't mean it's a guarantee, but that's definitely noteworthy. It's been de-risked because there's 55 holes in it. It's being de-risked because we did metallurgy.
Oh, that I have some specific questions on some of this. So,
Yeah.
U.S. dollar cost per meter of your current drill program and flat.
So that has a wide range because our intention is to go in with an RC drill and also a diamond drill. They have two different purposes, but, you know, obviously they are utilized to identify gold below your feet. We're using a hybrid approach here. So your cost per meter, and again, it depends on scale. So the more meters I drill, the lower cost per meter I can get that down to. And I will say, a lot of companies, how you figure out your cost per meter is different from company to company. So with all those caveats being said, you're looking at anywhere from $300 all the way up to $700 a meter is the spread with RC and diamond. And again, if you drill, now that's on a 5,000 meter drill program. If you're drilling 20,000 meters, we can get that cost much lower. Typically in northern projects or more remote projects, your first year of drilling is costlier. You build some infrastructure, some improvements. You can always, at all the drill programs that I've been involved, you can get your cost per meter down, but obviously with more time, infrastructure, and more meters.
What's the minimum size of the upcoming drill program? Which size would you aim if you had sufficient access to capital? So how do we on that?
I'll start off by saying that if someone gave me $10 million, I wouldn't be scratching my head necessarily on where to put the drill. There is no shortage of targets here. And I kept this one somewhat light, and I think I did, at least in the technical side of things, but there's a lot of merit to support what's below the 100 meters based on the deposit model of Fort Knox and what we and Crescat are seeing here at Flat. There's strong indications that the depth could be the sweet spot of the system. So, you know, if capital wasn't an issue, you know, we'd be coming in here with 20,000 meters. I could put together a resource just here alone if I wanted to go down that path. But capital is an issue. So that's why drilling this year is predicated on more capital coming into the company. And that will drive how many meters. We're looking at a minimum of 5,000 meters and would love to either ramp up or end the year with 10,000 meters if the opportunity presented itself.
What are the follow-up tasks after the initial metallurgical tests?
Well, we now have really strong evidence to support doing column testing. Challenge with column testing is you need material, so we can.
What's column testing?
Sorry?
What's column testing?
Column testing is a metallurgical test to determine if the mineralization is heap leachable. And so it sits in a column. There's different size of columns. You can do a 1-inch crush, a 2-inch crush, a 3-inch crush. The coarser the crush, the better economics. Like there's big caveats potentially. Now, run a mine. I said Fort Knox is essentially run a mine. They're digging up the ore, they're putting it on a pad. When you look at your all-in sustaining cost, your biggest driver for costs in that formula is crushing. If you have to crush the ore to a pebble or like a grain, so much energy, so much capital, very energy intensive. That's why Dahlin needs a pipeline. The column test we would probably do is a 3-inch crush. It's coarse, and then you play around with the crush size, so on and so forth. So we need material for that. So as we drill this year, we'll be collecting more material to do column testing.
Yep. Status of environmental permitting, and then I'll add to that on the project. You're on Native Corporation land, but you're still in the United States. So
yep.
Where does state and federal permitting kicked in some places? I guess all different arrangements. So how does all this work in the great state of Alaska?
Yes. So what I will say is there's 6 producing mines in the state right now. There was more at one point. So there is a tried and tested process to go through. Now, when you submit your permit applications, if you got your native partner, landowner next to you or with you on the application process, it's going to present a unified front. And also, as we go to the communities and villages, that's a huge plus as well to have the Native Corporation behind you. Water goes everywhere, so to speak. So you need a federal permit for that. So there are different levels where you need to get federal or state regulatory permission or approval to move things forward. Also, depending how you're shipping things out, things of that nature. So it is more streamlined, I would say, the fact that we're on native owned land, but it's not like a carte blanche that you can just go anywhere and do anything. I like working on native owned land because if we want to do say we want to build a road or something of that nature directly on the land, we deal directly with the Native Corporation. And it's also just, again, a more unified approach. But the process here, we are, because we're also using a diamond drill this year, for example, you need a water permit. Diamond drills need water. So that goes through federal approval, and there's typically no issues in providing that you do the right work. That can get turned around in less than 3 months. So
can you tell us a little bit about trace elements at flat? Arsenic, you help me with my periodic table.
Yeah,
BI, TE, and SB. I won't try to fudge that anyway.
So there is arsenic in the system. There almost always is with gold. Now, I'm not sure if this person's asking in regards to the Fort Knox geochemical signature. So gold has a bunch of best friends, and they're different best friends in different deposit styles. At Fort Knox, if you want to be a Fort Knox analog, for example, you need gold, bismuth, tellurium, and I think SB. Yes, so that's stibnite. So we have what's interesting about flat. And this is not, I'm kind of glad this person asked this question, but I'll go to this slide here maybe, is that why we're excited and why Quinton's excited. And I have more of a technical slide to speak to this, but there is the deposit model called the intrusion gold related system and where you sit in that system. So there's geochemical zonation. So each layer has different friends, if you will, or different elements. So Fort Knox has that signature. So where we're seeing that signature at flat is in the higher grade material. We're seeing a slightly different signature in some of the lower grade material. So that begs the question, where's that higher grade Fort Knox mineralization coming from? It looks a little bit different. At Golden Apex, you got that volcanic cap rock, but all the soils around that is carrying Fort Knox mineralization. So it didn't come out of the sky. There's only one place where it could possibly be, and that's at depth. So if you have a full intact Fort Knox system, and at least at flat here, the best or higher grade gold is in that signature. So we want to target that signature. And if it is at depth, which it can be, and is highlighted in this deposit model, then you could be completely blowing the roof off this thing if we find it. And the fact is, Golden Apex, it's creep. So that, just to go one step further, that mineralization, arsenic, tungsten, now I'm going gold, bismuth, tellurium. It's creeped out from somewhere in structures. So it's creeped out and exposed itself. So, you know, that's what I was saying. You can't hide a 45 million ounce gold system. It's going to peak. So it came from somewhere. And if there's structures below, that's the only place where it could come from. So that's why we're excited to drill at depth. We're excited to drill Golden Apex. And there could be multiple mineralizing events overprinting the system, again, which is usually an indicative sign of something big.
I want to thank everyone for your questions. And, you know, Tony, if you could help us with a bit of a timeline, like, you know, 12, 18 months, you know, forward-looking timeline, let's say, yeah. And catalysts, I mean, near-term catalysts we can hold you to sort of help us. Why should we look at Tectonic today, right now? You've had a great run-up since October this last year, and actually that was one of my questions. What changed in October? We'll close with that.
Okay, we'll start. What changed in October? Quite a few things. We did a financing in the summertime, and Crescat doubled their share position in our company based on flat. We also shifted the focus of the company. We had multiple projects, and we shifted.
That's for sure.
Yeah. Well, yeah, for 3, 4. But the focus really shifted, and rightfully so, because I remember I said every project has a 3-year timeline. So now flat was moving into the fold, and our marketing efforts, the Crescat investment, the Snowline discovery, this intrusion-related gold system model. Also just getting back on the road, and now that, knock on wood, COVID's hopefully behind us, travel opening up, we're starting to get more vocal. And the way our understanding too of the gold system here at Flat and the metallurgical results, or that program being launched, all manifested itself into more excitement in the story. Keep in mind too that we got decimated like decimated to all-time historical lows. So we were coming off of a pretty
only one way to go. So why should the next group of investors, we all are not so prescient as fine people at Crescat, why should we look at it now off the bottom?
Okay, well, keep in mind that Crescat and other shareholders too, their cost base is up near where we're currently trading at. They've participated in other financings. They should pay attention now, because you have the opportunity to go into a drill program on what potentially has the earmark of something big. It's the inaugural drill program. So you're going to have drilling kicking off, let's just say in June. You're going to have drill assay results, column testing, or more metallurgical testing. And those results will probably carry us right through to this time next year. If you want exposure to a large North American gold system that has been completely forgotten for 20 plus years, we're the first company to bring this project back after a 20-year hiatus. And these are rare. You can see the latest last couple 3-4 weeks here, there's been some M&A activity in the gold space. And if you want exposure to gold in North America and to that discovery stage, remember Snowline went to a $400 million market cap. Caminac did something similar as well. That's, when you go into your first drill program into something exciting, and again, the project's been de-risked, this would be a great opportunity to get exposure to that.
How many meters? How many meters in this? How many meters you're going to drill in this? 5,000, and then when might we expect assays from that, roughly?
So that answer is definitely predicated on the labs, which have been painfully slow. So you're looking, maybe August at some point, if we can, get results out or get samples out the door But August, September would start the sort of assay release. Again,
Yeah.
very similar to what Snowline did, and they had their bump and off they went.
Excellent. Very exciting. Really excited for you and your focus. So, thank you, everyone. Please share your feedback, and it'll go to Tony. So tell him what you think. Anything you want. Thank you, everyone. And Tony, will you be in Toronto? Some people are in Toronto
Yes,
next week.
Metals Investor Forum in Toronto, the pre-PDAC show.
Yeah.
PDAC, and then off to Zurich for the Swiss Mining Institute.
I
And
will see you there in person.
Yeah, it's going to be a good year of being on the road.
So if you're in Toronto or this next week, this weekend, and or Europe, Zurich in 2 weeks, we can put you all in touch with Tony. Thank you.
Yes. Please send through any questions or comments you have. There's our contact, my personal email, tony@tectonicmetals.com. Thank you, Campbell. Thank you, Amvest, and thank you, everyone, for your time.
Excellent. Thank you.